right, let's get into it. We are talking about a story that has absolutely set Wall Street on fire. It's about a tech giant that, let's be honest, a lot of us thought had seen its glory days. But now, the big question is, has this AI boom gotten just a little too hot to handle? Everything, and I mean everything, hinges on this one number, 36%. That's how much Oracle's stock jumped in one day, after one announcement. For a company this huge, a move like that isn't just a ripple, it's a tsunami. It makes everyone stop what they're doing and ask, wait, what just happened here? And that's really the million-dollar question, isn't it? How does a company that's been around since 1977, famous for old-school database software, suddenly become the new poster child for the AI revolution? Well, that word overnight, it's a bit of a myth. See, the truth is, this wasn't some lucky break. This massive success story was built on a foundation that Oracle has been painstakingly laying for years. This was all part of a very deliberate, very strategic pivot into the cloud. And hey, don't just take my word for it. This wasn't some 2020 hindsight thing. Go all the way back to February 2021, and you'll find Barron's was already on this. They were basically telling anyone who would listen, hey, you guys are sleeping on Oracle's cloud business, and they predicted the upside could be huge. And boy, were they right. I mean, just look at this chart. Since that article came out, Oracle didn't just outperform the market, it absolutely crushed it. A 45% annualized return just smokes the S&P 500 and even the tech-heavy NASDAQ. This proves the strategy was working long before the recent AI frenzy. And that transformation has been, well, transformative. Just a few years ago, the cloud was maybe 30% of Oracle's business. Today, it's half, 50%. They've literally remade the company from the inside out. So, okay, the foundation was solid, the comeback story was real, but that still doesn't explain a 36% jump in a single day. For that, you need a spark. And in this case, the spark was one absolutely jaw-dropping announcement. This is it. This is the slide that melted Wall Street's calculators. In just 3 short months, Oracle's backlog of signed deals, money they're guaranteed to make in the future, jumped from $138 billion to $455 billion. No, that is not a typo. They added over $300 billion in future business in 1 quarter. Just let that sink in. More than tripling their entire backlog. All of that came from a single deal, with a single customer. The scale of this is just, it's hard to wrap your head around. And here's the name behind it all, OpenAI. Yep, the company that gave us ChatGPT, the undisputed heavyweight champ of the AI world, decided to bet its future on Oracle's cloud. Let's be crystal clear on what this deal is. We're talking about a $300 billion contract spread over 5 years, starting in 2027. This isn't just a big win. It's one of the biggest technology deals in history, and it completely rewrote the narrative for Oracle's future. So Oracle pulls off this amazing turnaround, lands the deal of the century, case closed, right? Pop the champagne? Well, this is where the Barron's piece this is all based on takes a fascinating turn. It starts asking, is this deal almost too good to be true? The author, Adam Levine, breaks down this huge risk into 2 simple but absolutely critical questions. First, you've got the payer problem. Can OpenAI actually afford to pay $300 billion? And second, the provider problem. Can Oracle actually build out the massive infrastructure it promised? So let's look at OpenAI. For all their success, they're still a company that is burning through cash like there's no tomorrow, and they rely on investors to keep the lights on. Their biggest funding round ever was $40 billion. Now that's a huge number, but it's a drop in the bucket compared to the $300 billion they owe Oracle. That money simply isn't in their bank account today. Okay, now let's flip the coin. What about Oracle? Building out this AI empire is going to cost a fortune. Last year, they were already spending more cash than they were bringing in. They're already sitting on $112 billion in debt, and the article says that number will have to go much higher to make this happen. The point is, both companies are taking on a gigantic financial risk here. And this gets us right to the heart of the Barron's argument. The success has been incredible, the stock gains have been spectacular, but the entire risk profile for Oracle has now changed. It's not the undervalued comeback kid anymore. Now it's a high-stakes, high-wire act with a massive uncertain future. And wow, this chart tells the whole story.
Historically, Oracle traded at a valuation of about 15 times earnings. Just before the big news, it was at 19, and after, it blasted off to 46. At that kind of valuation, the market isn't just hoping for success, it's pricing in absolute perfection, with zero room for error. And so, the author delivers his final take, plain and simple. For anyone who owned Oracle stock, congratulations, you played it perfectly. But now, with the valuation this stretched and the risks this enormous, the smart play might just be to lock in some of those profits. Which leaves us all with this final, lingering thought. Oracle did everything right to catch this AI wave, but their story is a perfect example of the question every investor has to ask themselves today. In this AI gold rush, at what point does the excitement get so big that a sure thing starts to look a lot more like a gamble that's just too good to be true?